Is whether this rally is for real. Look at everything that's going on. Joining us, give their views, Tom Leiden, his editor of ETF Trends, and Kim Caughey, Vice President, Senior Equity Analyst at Fort Pitt Capital Group. Kim, I'll go to you first if I can. Let's talk about the news of what's happening with the cars. Are you surprised? I woke up hearing about everything that's happening with GM and what happened with over the reason. I got kind of nervous, but clearly the market used it as a relief, no?
Yeah, the market really likes certainty, and there has been a lot of telegraphing that June 1st was going to be a do or die day for GM, and bankruptcy was filed right on schedule. So, again, it's not great news for the holders of GM or their employees, but it is certainty, and the market's reward certainty.
Tom Leiden, you are turning bullish here, and it is so interesting as you look at all has developed. We can sit here all and say, is the rally for real? Anybody who put their money in knows it's for real because making money. They got to cash out on it, though. But how do you capitalize on these big moves like a day today?
Well, absolutely. And Liz, today is a critical move. If the S&P gets above 946 close, that's the first time it'll close above its 200-day average in 18 months. And that's a critical technical bellwether. But you don't want to miss out on the boom that we're having overseas. Emerging markets are booming. $23 billion has flushed into emerging markets funds, and one of the biggest is this iShares emerging market ETF, ticker symbol EM, and that has been up huge in the last 3 months, and I think that trend's going to continue.
But, Tom, as I look at what's happening domestically, a lot of people want to keep their money at home. They see all the trouble big companies are getting into, and they say, what about a small cap? What about going to the mid-cap size company? Those are that are much more flexible than these big corporations that are getting so much trouble.
You're right, David. And small cap and mid-cap stocks and ETFs have outperformed large caps, especially because they don't have as much in the financial and the autos. So the one in particular, the SP 400 mid-cap ETF, ticker symbol IJK, that is above its 200-day average. It's outperformed in the last 1 month and 3 months. And again, it's a little bit nimble than some of the larger stocks that are out there.
Kim, we've seen some interesting behavior globally. You like BIC, not necessarily BRIC. It's BRIC without the Russia as part of it. So Brazil, China. And how do you play that? And sort of conversely, when bizarre behavior in the bond market like we saw last week, is it important to just go overseas and kind of turn your back on the U.S.?
Well, because we don't have feet on the street, over in those big countries, what we prefer to do is make sure that the U.S. equities that we own have a lot of exposure to those markets. So we're looking at the large caps, kind of piggybacking off what your last guest just saying about growth in emerging markets. There's a lot of U.S. companies that get a lot of revenue out of those areas, and that's where we'd be looking instead of necessarily trying to buy individual securities that are based in those markets.
Yeah, sure, it's tough buying the individual names. Caughey and Tom Leiden, nice to have you. Thank you very much. Coming up.